Wild day for the markets. The Dow sinking nearly 300 points at the lows of the session, then reversing to end the day up by about 200 points amid more twists and turns in the U.S.-China trade war. Elon Moy is live in Washington, D.C. with more on this developing story. Elon.
Melissa, there has been a lot of confusion over the status of negotiations. So let's start with what we actually know. We know that top U.S. officials and top Chinese officials are talking. I confirmed today that Treasury Undersecretary David Malpass, who heads up international affairs, he held a video conference call with his Chinese counterparts to prepare for the G20. We also know that China has sent a letter to the U.S. outlining its position. We don't know exactly what that position is. Reuters reporting that it includes 142 points to negotiate. We do know that, broadly speaking, that letter is unlikely to move the ball. There was also a report in the FT today that U.S. Trade Representative Bob Lighthizer has told industry groups that the final tranche of tariffs on Chinese goods, that $260 billion or so that is not taxed, that is on hold until after the G20. However, in a statement to CNBC, his office said that Lighthizer has made no representations that future tariffs are on hold. The plan has not changed at all, and any reports to the contrary are incorrect. Well, guys, my sources are cautioning that all of these nuggets that are leaking out are just part of the normal process of preparing for a big meeting between two world leaders. But Melissa, we know this is a president who likes to operate off the cuff, so it is significant that his administration appears to be taking this meeting seriously. Back over to you.
All right, Elon, thank you. Elon Moy in Washington, D.C. Tim Seymour, the problem is that lots of little bits of these little things get leaked out. And while this may be par for the course when it comes to a lot of trade negotiations, I don't know if we're really used to this much information and trading every tick.
Well, I don't think the market has any confidence in the information. I realize that the market is moving and we're getting some gyrations here or there. But I think the point we want to emphasize is this trade discussion is not about manufacturing jobs in a Rust Belt state. This is about technology transfer. This is about theft. This is about global strategic intentions, and this isn't going to change quickly. So the irony from a market's perspective, or maybe this is good news, forget irony, is that actually emerging markets and China have outperformed the S&P since October 1, since the volatility. So we always talked about, hey, the rest of the world, when does this catch up to us? We're effectively seeing that. It's not like they've done so well. In fact, on a net basis, these markets are kind of sideways. But certainly the U.S. is underperformed here, and that is something that people should think about how they're trading.
So to Tim's point, Melissa, when you look at Alibaba off the October lows, Alibaba's up 21% off the lows against an Amazon that's up 7%, against an S&P that's basically was up 2% or 2.5%. So you're looking at all these large cap China tech plays. That's the way to play it, because the worst seems to be out of the way, or at least it's getting a little bit of a pass for a couple of months, maybe.
Wait, the worst seems to be out of the way?
I would think that most of this stuff has to be priced in to a certain extent. We were worried about tariffs hitting on Jan 1.
You think the next round of tariffs is priced in? You think that the tariffs that are in place that are 10%, that are going to go to 25%, they're priced in too?
I think the next round of tariffs were priced in, and today you got a little bit of a reprieve, and people said, all right, maybe we'll dip our toe back in. So they were priced in to the extent that they could be without actually taking effect.
I feel like Brian Kelly is probably sitting right next to you, wants to smack you right now.
I'm skeptical of this whole
Reach
thing.
across the box.
Maybe they were priced in, maybe they weren't priced in, but I'm skeptical. These leaks happen to come out every time the market's down. How come these leaks don't come out when the market's up 200 or 300 points? I mean, I'm completely skeptical that anything is actually going on, and I don't think we're going to go anywhere.
Pete, what do you do?
Well, I think you always go for quality, Mel. I mean, we all know the story. Every one of the guys is talking about it right now. And BK makes a very good point. We always hear these talks are getting together again when we see the market down, and we were down significantly today. I mean, it was pretty interesting early in the morning, down over 200 points, and only to watch the market rally back. But when you look at some of the quality names that did start to move the upside, and some of the names that we do actually already know some of the results of, even with the clarity not being there for instance, a Caterpillar. As inexpensive as that stock is, the reason that it's trading where it is even right now after the nice move of today, the reason it's trading there right now is because of the uncertainty going forward. But at least there was some reprieve today. So that's something I think you hang your hat on. But you do go to quality. Look at JP Morgan. Obviously, Buffett gave the help to that bump today. But he went for quality, which is something that Warren Buffett always does. So I think when you're looking in this market, and we have these days where we're down 200 points, whether the president tweets or some sort of story out there exists or not.
What did you buy then? What'd you buy?
I bought the EEM today.
All right.
I already had pieces of the EEM, but I added to the EEM today. I still don't believe in GE. I think that's going lower.